All right, good afternoon, everyone. It looks like we have a few people logging on and joining us right now. I will make the introductions short and sweet. Welcome to the Business Academy Masterclass on Beneficial Ownership Reporting Requirements. I'm Kaylin George, Director of Communications at the Chamber, and thank you so much for joining us today. I want to say a special thanks to the U.S. Treasury's office and Senator Joe Manchin's office, who helped us put this programming together. And we're also so pleased to be joined by Mark Carter here, who heads up the Chamber's Human Resources Committee. Before we get started, we do want to share some special remarks sent in by Senator Manchin. So I'm going to pull those up for us now.
Hello, I'm United States Senator Joe Manchin. I want to thank Mark Carter and the West Virginia Chamber of Commerce for providing this webinar today. And also thanks to David King from the Financial Crimes Enforcement Network, a bureau of the U.S. Department of Treasury. The network is a driving force in the security of our national economy. New beneficial ownership information reporting requirements help curb illicit transactions and support the financial future of our country. All citizens benefit from these requirements. A simple, secure, and free of charge filing system is provided. This filing deadline of January 1st is approaching soon. The webinar is a wonderful opportunity to learn key information about the importance of these new requirements. Through strong communication and collaboration, I have no doubt that this meeting will result in even greater opportunities to strengthen our West Virginia businesses. Again, thank you and God bless.
Again, thank you to Senator Manchin and his team for helping us put this together today. Now we'd like to introduce our expert panelist. You can see him up there on the screen. He is from the U.S. Treasury Department's FinCEN Bureau. David King is FinCEN's Guidance and Outreach Director for BOI, and we're very grateful to have him here with us today. Questions are encouraged, and David will be taking them after his presentation. So if you have any questions, please just submit them in the Q&A box, and we'll read them after the presentation. And with that said, I am going to turn it over to David. Thank you.
Thank you so much. Really appreciate the support of the Chamber and Senator Manchin's office. Really very pleased to be here today to get to talk to you all about beneficial ownership information. Some of you may have heard about the Corporate Transparency Act and these new reporting requirements before, but we will start by giving a little bit of background on the law and also who is FinCEN, as many people have not heard of us before. And then we will get into the substance of the regulation and cover which companies this impacts, what information needs to be reported, who is considered to be a beneficial owner, who is considered to be a company applicant, when to report, how to report, and what to do if a report needs to be updated or changed. At the end of my presentation, I'll also demonstrate the filing portal itself, so you can all see the form and navigate through that website, as well as make you familiar with some of the compliance resources we have put out to assist small businesses in understanding these requirements. And then finally, at the end, we should have time for any Q&A if there are any issues that remain unresolved that you'd like to ask us about. So with that said, let's dive into it. So the Corporate Transparency Act, for those of you who may not be aware, was a bipartisan piece of legislation that was passed by Congress in 2021 that requires many companies that are doing business in the United States to report certain information to the federal government about who owns or controls the business. The part of the federal government that receives those reports is the Financial Crimes Enforcement Network, also known as FinCEN, which is a bureau of the Department of the Treasury. And I work for FinCEN. I'm the Guidance and Outreach Director for Beneficial Ownership at FinCEN. The purpose of this law, which is a question we obviously get very often, is to crack down on the illicit funds that hurt law-abiding communities and impact law-abiding and legitimate businesses and impact negatively our economic and national security. And we can get into a little bit more about how that works and why that works as the presentation proceeds. Before we go any further, I do want to draw everybody's attention to our website. I'll mention it a number of times during the presentation. It is fincen.gov/BOI. And on that website, you can file the report directly. It is free to do so through our secure e-filing portal. And there are also a number of resources that are available to help businesses understand both the requirement and the reporting function. And that includes a compliance guide, frequently asked questions, demonstration videos, and other resources in multiple languages. The regulation went into effect on January the 1st of 2024. And many companies will need to report. And we're going to get into in just a moment what the deadlines are and who this impacts. But the important thing to know at this point is that the regulation is already in effect. So, as I said previously, today we're going to cover a few different topics. Which companies have to report? Of those companies, who meets the criteria of being a beneficial owner? Which companies have to report their company applicants and who is a company applicant? What information needs to be reported about the business and its associated individuals? When and how companies file the reports, and what they need to do if there are changes or inaccuracies in information that has been reported. A couple of things that I want to say before we go any further. The first is all of the information that is in this presentation, which we're also happy to make available to any attendees, is available on our website as part of the Small Entity Compliance Guide, which again is available at fincen.gov/BOI. The other point that I would like to make up front is that the information that is reported to FinCEN will not be public. We get many questions about who will have access to the database, and I'm happy to talk about that more in depth, perhaps during the Q&A. But the important thing to understand is that unlike in some other countries, this beneficial ownership database is not public facing. It is only available to certain authorized users from the law enforcement community primarily, as well as certain financial institutions with the consent of their customers. And we can talk about that more, as I said, towards the end of the presentation. The first question that people will need to ask themselves, or companies will need to ask themselves, is, do I have to report beneficial ownership information? The regulation impacts two different types of companies. The vast majority of companies that are impacted will meet the first criteria, which is domestic reporting companies. And that is any entity, such as a corporation or limited liability company, that is created by the filing of a document with a Secretary of State or similar office. And then similarly, a foreign reporting company is an entity that is formed under the laws of a foreign jurisdiction, but is registered to do business in the United States, again, by the filing of a document with a Secretary of State or similar office. And I want to pause here and reinforce this message because I think it is very important to understanding everything that comes after. If you have a legal entity, a business, that is created by the filing of a document with a Secretary of State or similar office, then you are likely to be considered a reporting company. Other types of entities that exist that are created without the filing of a document with a Secretary of State or similar office, such as, for example, some types of sole proprietorships and certain types of trusts, are not considered reporting companies and do not need to file a BOI report. For both domestic and foreign reporting companies, there are 23 exemptions that were written into the Corporate Transparency Act that exempt certain types of companies from needing to file the report, even though they meet the definition of being a reporting company. Those exemptions primarily impact businesses that are already in heavily regulated industries, such as banks and credit unions, but there are some exemptions which may apply more broadly, and these include an exemption for certain types of tax-exempt entities, an exemption that applies to certain large operating companies, and also an exemption that applies to certain types of inactive entities. For each of the exemptions that exist, FinCEN has put out a simple checklist with yes or no questions that enables companies to determine if the exemption applies to them. And those are available in the small entity compliance guide that I mentioned earlier, and I will show that at the end of the presentation. So once we have established that we are a reporting company who needs to file a beneficial ownership report, the next question is to determine who are the beneficial owners of the company. There are two types of beneficial owner. All individuals who meet the definition of a beneficial owner will need to be reported. So the first type are individuals who own or control at least 25% of the ownership interests of a reporting company. So what do we mean by ownership interests? Well, as you can see on the slide, that will mean things like equity or stock, options and privileges, or other instruments or contracts or mechanisms that help establish ownership. All individuals who own or control at least 25% of such ownership interests will need to be reported as beneficial owners. There are, however, some small exceptions to that definition, and those would include minor children, individuals who are nominees or intermediaries, individuals whose qualification is purely on the basis of being an employee, and certain types of inheritors and creditors. And again, there is more detail about those exceptions and the definition of ownership interests in the small entity compliance guide, including detailed graphics and examples to explain how to calculate the percent of ownership interests that an individual may hold. The second type of beneficial owner are individuals who exercise substantial control over a reporting company. And what do we mean by substantial control? Well, we're looking at 4 general criteria. Those would be individuals who are a senior officer of the company, an individual who has authority to appoint or remove officers or a majority of directors of the company, an individual who is considered an important decision maker in the company, or more broadly, any individual who has another form of substantial control. Again, the small entity compliance guide provides further detail on how to apply these different criteria. We have established what types of companies need to report and how to identify the beneficial owners. The next question to ask is, does a company need to report its company applicants? And if so, who are the company applicants? The good news here, I think, is that for companies that were created or first registered to do business before January the 1st of this year, so before January the 1st of 2024, they are not required to report, their company applicants. But for companies created in 2024 and beyond, so starting on January the 1st and into the future, they will need to report at least 1, but no more than 2 individuals who are considered company applicants. The definition of a company applicant is an individual who directly files the document that creates or first registers a domestic or foreign reporting company. For companies that need to report a company applicant, there will always be an individual who directly filed those documents, and they will need to be reported. In addition, they may need to report a second individual, and that would be an individual who was primarily responsible for directing or controlling the filing of that document. One question that I hear very frequently is, what happens if an individual is both a beneficial owner and a company applicant? And there is no issue. That is an anticipated situation. Indeed, for many small businesses, an individual may be a beneficial owner by both ownership interests and through substantial control, and they may also be a company applicant. They do not need to be different individuals. So now that we've established which companies need to report and who is a beneficial owner and who is a company applicant, let's look at what information itself needs to be reported. It's a fairly limited list of information that companies are required to report. First of all, about the company itself, they need to report legal names, including trade or DBAs, a complete US address, a jurisdiction of formation, or for a foreign reporting company, the jurisdiction in the United States of first registration, and a taxpayer identification number, or for a foreign reporting company, potentially a foreign tax ID number. For individuals who are beneficial owners or company applicants, they will need to report their name, date of birth, address, and an identifying number and issuing jurisdiction from, as you can see on the slide, a non-expired driver's license, US passport, or other state, local government, or tribally issued ID document. If none of those exist, a foreign passport can be used. An image of whichever document is listed on the form will also need to be provided. Everything that I have spoken to up until now is a regulatory requirement as part of the law of the Corporate Transparency Act. This slide, however, refers to something that is purely optional and is a choice that people and companies can choose to make, but do not need to make. And I want to stress that. A FinCEN identifier, also known as a FinCEN ID, is something that people can request, but do not need to do so. So if you're not interested in getting a FinCEN ID, you can ignore what I'm about to say and ignore this part of the presentation. So what is a FinCEN identifier? Well, it's a unique ID number that FinCEN issues to individuals or reporting companies upon request, once those individuals or companies have provided the information that I just listed previously directly to FinCEN. Individuals or companies may only receive one FinCEN ID. That FinCEN ID number can then be used on beneficial ownership information reports instead of listing the required information about the owners or company applicants. So what is the purpose of the FinCEN ID? Well, for individuals who may be involved in filing multiple reports, either through ownership or because they are involved in creating many companies, for example, it may be both simpler and more efficient and also give more privacy to simply provide reporting companies a FinCEN ID number rather than all of the required personal information. So the FinCEN ID is an optional ability that FinCEN has provided for individuals or companies who want to make use of it. But again, non-mandatory. So now that we've established which companies need to report and what information needs to be reported, let's discuss when and how companies need to file their reports. For companies that existed prior to January the 1st of 2024, i.e. companies that were created or first registered to do business in the United States before January the 1st of this year, they have until January the 1st of 2025 to file their initial BOI report. So if this describes your situation and you have not yet filed your report, you have approximately 6 weeks to file this report before the end of the year to stay in compliance. Excuse me. For companies that are created or first registered to do business in 2024, they will have 90 days after receiving actual or public notice that the registration or creation is effective to file their initial report. Going forward, starting on January the 1st of 2025, New companies will have 30 calendar days to file their initial report. If you are required to file a report, you can do so, as I said at the start, for free through FinCEN Secure Electronic Filing System, available at fincen.gov/BOI. There are, as some of you may be aware, third-party service providers who have been given API access to submit reports directly through FinCEN's portal system. Some of those companies may charge for their services, and companies are permitted to use such services as a matter of choice. But I do want to reiterate that filing is free to do directly with FinCEN. If a report is filed and the information changes, the company has 30 calendar days after the change occurs to file an updated report. Similarly, if information that was filed later turns out to have been inaccurate, and the company becomes aware or has reason to know of the inaccuracy, they have 30 calendar days to file a corrected report. If companies do not report their BOI within the required time frame, there are certain penalties that are written into the law. FinCEN recognizes that this is a new regulation that impacts many millions of businesses in the United States. And we are working hard to make sure that everyone is aware of this obligation and understands the requirements. We do also understand that as this is a new requirement, there is significant outreach that needs to happen. There is a safe harbor written into the law that if companies correct a mistake or omission within 90 days of the deadline of the original report, they may avoid being penalized. However, there are significant civil and criminal penalties for willfully disregarding beneficial ownership information reporting obligations. I do want to stress that the purpose of this law is not to trap law-abiding businesses in inadvertent mistakes that lead to civil or criminal prosecutions. The purpose of this law is to crack down on illicit finance and money laundering, and the standard for enforcement is a willful violation. So, with all of that said, I will make one more plug for our website at fincen.gov/BOI, where we have a number of resources. And I look forward to showing that to you all in just a moment. And I will pause there, Kaylin, to see if there is anything else before I demonstrate the website.
Hey, thanks so much, David. That was very, very helpful information. We don't have any questions right now in the Q&A chat box. So if you want to go through and do the demo, and anyone who's on the call, we encourage questions. So just put them in the chat box. Thanks.
Very good. Okay, let me share my screen again. And Ken, if you can let me know when you can see it. Hearing no objections, I will assume that you can see my screen.
We can see the screen.
Okay,
Thank
very
you.
good. So this is the website that I mentioned. This is fincen.gov/BOI. As you can see right here where it says file, excuse me, if you click file a report, it will take you directly to the e-filing portal. Right here where it says beneficial ownership information reporting, if you click get started, it will take you to this page. And there are two different options for how to file the report. The vast majority of businesses that have already filed have used our online filing form, which is available here. For companies that potentially, for example, have inconsistent internet connections, or need to spend a bit more time preparing the document, or for any other reason that you may have, you can also download this PDF available here and fill it out and then re-upload it through the website using the submit button. Right now, I'm going to show you the online form. So this is the form itself. As you can see, there are multiple different types of forms that you can file, but they are all essentially the same. For a company that is doing this for the first time, you would file an initial report and then click to the tab right here that asks for the information about the reporting company. As I showed you on the slide, you then fill out the required information with the company names, the tax identification number, the jurisdiction of formation, and the current US address. Similarly, for both company applicants and beneficial owners, you fill out the required information with legal name, residential address, form of ID, and an image of the ID document itself. And then you go to the submit page. I do want to pause here and note that in order to file this, you will be asked for your email address. It is very important that whichever email address you use, you have access to, because once you have filed, an automated email will be sent confirming that it was received successfully or that it was rejected for some reason. So I do stress that whichever email address you use here, please make sure you have access to it. In addition, when you submit the form, there will be an option to download a PDF version of the report itself. If you would like to save a copy of the report for your records, that will be your one and only opportunity to do so. For privacy reasons, FinCEN will not be able to send copies of the report after the filing has been completed. Unless there are any questions about the form, I will return to our webpage to show you some of the small business resources.
Hey, David, thank you. We actually do have a question that popped up in the chat box. And it is, what is the identifying document number for the state driver's license? This person said that they put their driver's license number in, but it wasn't accepted.
That the driver's license number would be the number. So I'm not quite sure why that would be not accepted. I would need to have a little bit more information, but that is a very useful segue, I think, to show some of our resources, which will hopefully help answer some of these questions. But I think the short answer is that maybe it's not being put into the right box. But if the person who's asking has more information to provide, I'd be happy to help look into that. I think this is a useful segue to point out there are two options available on our websites here. This button, chat with us here, will take you to an automated chat bot, which will be able to answer a number of simple questions around the requirements in the filing process. Excuse me. And if you have more complicated questions, this button here that says Contact FinCEN takes you to a form that you fill out. Please make sure to click this option, Beneficial Ownership, Corporate Transparency. Put your message in here, fill out all the required sections, and that will go to a person who should be able to assist with your inquiry. Hopefully, though, that will not be necessary, because here in the Small Business Resources section of our website, we have the Small Entity Compliance Guide, our constantly updated page of frequently asked questions, as well as introductory videos, including this presentation, and demonstrations of the filing portal, as well as quick reference guides. I'm going to show you now some information from the Small Entity Compliance Guide, which, as you should be able to see here, is available in multiple languages. I, however, as an English speaker, will use the English version. So the guide itself covers the material that I discussed here during the presentation, but also goes a little bit more in depth on some of the nuances. A couple of areas that I want to draw your attention to. Chapter 1.2, is my company exempt from the reporting requirements? On this page here, which hopefully you can see, it lists all of the 23 types of exemptions. And if you continue to scroll down, for each exemption, we have created simple yes/no checklists for companies to use to establish if the exemption applies to them. I will scroll down now to the exemptions which maybe have the broadest applicability to general businesses. And those would be, first of all, number 19, the tax-exempt entity. As you can see, there are 4 criteria, and if you meet any of those 4 criteria, you are exempt from this reporting requirement. And those would be organizations, for example, that are described under 501(c) of the Internal Revenue Code. In addition, exemption number 21, the large operating company exemption, applies to entities that meet all 6 of the following criteria, which I will not read out, but will summarize as saying that you need to have filed a federal income tax return in the United States for the previous year, demonstrating more than $5 million in gross receipts or sales. You need to have more than 20 full-time employees that are employed in the United States, and you need to have a physical operating presence in the United States. And if you meet all of these 6 criteria, you may also be exempt from this reporting requirement. In addition, subsidiaries of certain exempt entities, including subsidiaries of large operating companies and tax-exempt entities, may also be exempt. And finally, certain inactive entities are exempt under exemption 23, which applies to entities that meet all 6 of the criteria, including having been in existence prior to January the 1st of 2020 and not being engaged in any active business or holding any kind or type of assets. As I said, there's a great deal of information in this guide, so I will not go through it all today. But I do also want to flag that there is more information here about how to understand ownership interests and substantial control, including through checklists about how to establish if an individual meets the definition of having substantial control, and also checklists for ownership interest, as well as graphical representations to understand certain more complex scenarios. Moving back to our website, I also wanted to highlight the frequently asked questions page, which has covered a number of the questions that we receive most frequently from all of our outreach and from the contact center, and cover a myriad of issues to include generally what the purpose of the law is, how the reporting process works, how certain reporting companies are or aren't affected by the regulation, including, for example, sole proprietorships, S-corps, and certain types of trusts, and also further information about who is a beneficial owner and who is a company applicant, what the reporting requirements are, how to update reports, what to do if a company that has filed a report becomes exempt, and also how to understand the compliance and enforcement statements. For individuals that would like to stay up to date with the latest from our FAQs, you can also subscribe here to FinCEN news updates, which will alert people when new FAQs have been published. With that being said, I will pause there. I'm happy to go further into any of the materials and also take any questions.
Yeah, thanks again, David. And for everyone watching, the U.S. Treasury's Department did share with us their BOI reporting toolkit. So we will post that on wbchamber.com along with the recording of this webinar. We do have a couple questions. One is, are you able to enter a PO box address in the company information section of the form if that is a primary business mailing address?
Great question. So hopefully you can still see the FAQs up on the screen. And we indeed have an FAQ around this exact question. So FAQ F8 points out that a reporting company's US street address cannot be a PO box.
Thank you. Also, and I know that you did address this at least a little bit, but could you dive a little deeper into tiered entities, businesses owned by another company or series of companies, or a company owned by a trust?
Yeah, absolutely. I'd be happy to. And I apologize, I've got a bit of a crackle in my throat here. So I think to address some of the more common questions that we get, the first thing to understand is that an entity cannot be a beneficial owner. That's one of the questions I get most frequently. If my business owns another business, then does my business need to be reported as a beneficial owner? No, beneficial owners are always individuals. Now, if companies are owned through other companies, we will need to calculate what the ownership interests are of the individuals themselves. So to give a simple example, if a reporting company is owned 50% by two other companies. So company A is owned 50% by company B and 50% by company C. And the beneficial owners of company B are two individuals who themselves own 50% of company B. Then both of those individuals have a 25% ownership interest in company A. So that's generally how we would understand it. And as I said in the compliance guide, we provide more examples of increasing complexity about how to calculate things like ownership interests. But does that answer your question, Kaylin?
It does. Thank you so much.
I would also say with trusts, similar thing. A trust itself cannot be a beneficial owner. It maybe is not considered a legal entity, more like a legal arrangement, but it's not an individual. But you can be a beneficial owner of a reporting company with ownership interests that are expressed through a trust agreement. And again, we have put out a number of FAQs that specifically address both whether trusts themselves need to report beneficial ownership information, and some types of trusts do, because they are created by the filing of a document with a Secretary of State or similar office. And similarly, the beneficial owners of a reporting company can be, as I said, they can own those ownership interests through a trust, and FAQs D14 and D15 explain how to understand who the beneficial owners are when those ownership interests are held in a trust.
Thank you so much. Now, people watching this back, if they have additional questions, I know that you shared the chat bot on your website. Are there any other places that people should go to get their questions answered?
Yes. So as I said, there's the chat bot on the website, but I will also just point out again, the chat bot is sort of an AI function. But if your question can't be answered by the chat bot and you couldn't find the answer in the FAQs or the compliance guide, then using this contact form, you can send a message to our contact center, which is staffed with people. It may take, depending on the complexity of the question, it may take us a little bit of time to get back to you. But those questions are all seen by somebody that is working in the FinCEN contact center. And we will get back to you with a response as soon as we're able.
Perfect. Thank you so much. I think you answered all of the questions. So
that either means that the presentation was so good that nobody has any other thoughts, or that it was so confusing that they don't even know what to ask. But I'm happy to give people a bit more time if they have more. There are no bad questions, so I'm very happy to answer any ones that people may have.
Well, we're going to go with the presentation was so good. It was very detailed. Thanks for pulling up the website and bringing us through every step of the process, and sharing those FAQs with everyone. I know some of those same questions were entered into the chat box, so those FAQs are definitely hitting the mark. And for anyone, if you do have a question after this that is specific to your business, if you just want to send it to the West Virginia Chamber, you can send it to me. My email is kjorge@wvchamber.com, and we will look into it, reach out to David, we can reach out to Mark and get your questions answered. Thank you again, David, for your expert review, and to the U.S. Treasury Department and Senator Manchin's office. Again, this webinar will be posted on wvchamber.com, where you can go and watch it again. And with that, you know what? As I was giving my closing, there was another question in here. Oh, will we be getting a recording of this? Yeah, we will post this on wvchamber.com, and we'll also share it on our social media channels and in our member-wide newsletter that comes out on Thursdays. So thank you so much for everyone who attended. Thank you again, David. We appreciate your time. And I hope everyone has a great day.
Thank you so much, everyone. Have a great day.